Hi, so today we're talking about the subject of tax, and this is especially in the UK, um, particularly for people that are earning extra income through side hustles. So, over the last few years, for obvious reasons such as a high cost of living and people wanting or rather needing to have additional streams of income, a lot of us have probably started a side hustle online, right? You probably have a full time job and you pay your taxes as an employee. Nothing wrong with that. Obviously, we're not all extremely happy with the tax rates because we always feel like we're probably getting a little bit poorer and the tax rates are not necessarily dropping. But what is happening is that there is going to be a higher level of scrutiny on the taxes that we're meant to now be paying on the side hustles. So this is not a change of UK tax rules whatsoever. There's always been guidance from HMRC and rules from HMRC that allow anyone who's who's receiving or earning an additional side income to get what's called a minimum trading allowance, and this has always been something around up to £1,000 a year that you can get tax free from other sources of income. And the moment you're earning over £1,000, the rules state that you must submit a tax return where you declare this income. For majority of people, I guess the idea of completing a tax return hasn't always been something you've ever really needed to do because it's not a mandatory thing to do in the UK if you're only earning a full-time income and you're earning less than £100,000. So unless you're trading as a company director or you're earning additional income outside of employment, you will already be familiar with filing a tax return for self-assessment purposes. Now, this um, £1,000 additional income thing has always been there, and some people that are familiar with it have always been following that rule. The difference now is that if you are earning extra income from platforms like Airbnb, Etsy, Uber, Fiverr, or Upwork.com, we've got a big gig economy that's building up in most recent years. If you're earning income from those type of sites, there is now a rule that has come about, which is being implemented from the 1st of January 2024 in the UK, which allows HMRC to actually now have direct access to those platforms to be able to check whether what you're declaring on your tax return tallies with what you're actually earning. So, in other words, it just means that they have more access to data and you have every reason to make sure that you are declaring the correct amount of information. Now, for many people, the general consensus is you can't argue with tax rules. You just have to make sure you're following them, you're being as tax efficient as possible and claiming as many allowances as you can, and making sure that you're claiming for whatever expenses you can to reduce your tax liability. There is nothing wrong with doing that as long as you're doing it within the rules. There does, however, seem to be a sentiment that people are generally getting poorer because of high levels of inflation, and taxes themselves are stagnant, right? The amount that we're paying has stayed the same, but what we are earning is not going as high. So essentially, we're probably becoming poorer with the level of taxes we're already paying. And it does feel like the harder you try to work, the harder you try and make ends meet, the taxman is still after that. So that's a whole separate discussion, which we could get into, on a different day, on this issue. But I think the real reason why I just wanted to do this video today was to just make sure that you are aware of this updated position. I don't want to call it change of rules because you are always expected to pay the right amount of tax in any case. But it just simply means that HMRC can now have access to these platforms. And so if you haven't already declared that you are earning additional income, then the filing deadline for tax returns is always the 31st of January after the end of the tax year. So say, for example, at the moment, the tax year we're in now, at the time of recording, is going to end on the 5th of April 2024. That means that if you've earned any income from a side hustle, or if you're a freelancer from those sites that I've given examples of, then it means that you have to make sure you file your self-assessment tax return by the following January, which is the 31st of January 2025. Now, the other question that may arise is, So how much tax should I expect to pay? Right? So the level of tax you'd expect to pay on a side hustle or from income in the gig economy purely will depend on how much you are already paying on your main job, if you do have a main job already. Hence the term side hustle, because side hustle implies you already have a main job, but you're trying to earn something extra on the side. So if you are earning, for example, under £50,000 a year, the average UK salary in general is below 30,000, to be fair. So if you're earning less than 50,270, somewhere there, the level of tax you'd typically pay is 20%. But there is a tax-free element of 12,570, which you don't pay any tax on. So you essentially pay 20% tax as long as your overall income is within that threshold. And so if you have a side hustle and you earn an extra, I don't know, £5,000 on your side hustle and you're still below 50K overall, then you'd expect to pay tax at 20%. If, however, you are fortunate enough to be a high rate taxpayer and you earn over 50,000, I'm just rounding the figures up here, then it means that you would pay your side hustle taxes at the rate of 40%. Okay, so that's those are the average rates for you there. So what I would recommend is, if you're in doubt, you can speak to an accountant to help you make sure you understand or do your own research. However, filing a self-assessment return could be something that you can do on your own if you feel confident and comfortable to do that, but just make sure you are aware that you are declaring the correct amounts, you're claiming the correct expenses, and you are also submitting the returns on time. So hope that is helpful, and we will keep an eye on what HMRC are saying about this. They have invested a good amount, about £36 million, I understand from research, on this particular project and drive, because they are realizing that there's a huge proportion of people in the UK that are operating in the gig economy, and they want to make sure that they are getting the right amount of tax from this group. I'm talking, I think it's 7.25 million people, which is 1 in every 6 people that are operating in the gig economy. So I think, we're all trying to work as hard as we can. We're all trying to be creative in making, that extra income. And I think it's important for us to recognize we also have to be as tax efficient as possible in that process. So I'll keep you posted if there's anything else that comes up on the subject, but I hope this has been helpful, and I look forward to seeing you on the next video. Remember, look after yourself and keep building you.